Welcome back to Iraqi Dinar Alert. The idea of the Iraqi dinar suddenly revaluing overnight has captured the imagination of millions of investors worldwide. People often wonder what would happen if Iraq just woke up one morning, announced a major monetary change, and instantly skyrocketed the value of its currency. While this scenario is incredibly exciting, it also raises some serious questions. How would the global markets react? What would happen inside Iraq itself? And honestly, how realistic is such an event? Today, we're doing a deep dive into the chain reaction that would follow an overnight revaluation of the Iraqi dinar, and what it would truly mean for investors and for Iraq's economy. So, what exactly is a sudden revaluation? It is when a government or central bank officially increases the value of its currency against other global currencies. A sudden revaluation means this change happens quickly, without warning, and takes effect immediately. If the Iraqi dinar, which trades at a very low value today, were to suddenly jump dramatically overnight, it would be one of the biggest currency events in modern history. Let's imagine it happens. The first thing you'd see is an official announcement from the Central Bank of Iraq. This message would explain the new exchange rate, the reasons behind it, and how citizens and banks should respond. You can bet this would instantly become global breaking news. Inside Iraq, banks would likely close temporarily, or at least limit withdrawals to prevent panic and stop people from exploiting the new rate. ATMs might shut down for a bit, and financial institutions would work around the clock to update all their systems, from software to exchange rate boards and international transfer channels. The public response would be mixed. People holding cash would rush to deposit it, worried about new limits. Businesses would scramble to recalculate all their prices. It would be a time of excitement, but also a lot of confusion. Now, what about the global financial markets? An overnight revaluation of the dinar would send shockwaves through the international monetary system. Forex platforms around the world would probably freeze IQD trading to prevent extreme volatility while everyone tried to figure out the new rules. And because Iraq is a massive oil producer, global oil companies would have to immediately reassess contracts, payment structures, and all their financial obligations. This could even put pressure on neighboring Middle Eastern currencies, causing some short-term instability. For dinar investors worldwide, this is the moment they've been dreaming of. If the rate increased dramatically, people holding dinar outside Iraq could see massive profits. But it wouldn't be as simple as walking into a bank. Currency dealers would be overwhelmed with exchange requests. You could face serious delays, appointment-only exchanges, and a shortage of available cash. And don't forget taxes. Profits from a revaluation would be taxable in most countries, requiring you to report large exchanges and show proof of purchase. For Iraq's economy, a sudden revaluation is a double-edged sword. On one hand, the government and its citizens would have much stronger purchasing power. Imports would become cheaper, which could help control inflation and support economic growth. On the other hand, a sudden shock like this could also cause market panic, price confusion, and business instability. This is why central banks almost never do it suddenly. A successful revaluation requires careful planning. So, could Iraq actually revalue overnight? While it makes for exciting speculation, most economists believe a sudden surprise move is unlikely. The risks of market instability and technical glitches are just too high. Most countries adjust their currencies gradually. However, Iraq could make a significant move once its banking reforms are complete, anti-corruption measures are successful, and the country fully transitions to modern digital banking. These steps would support a controlled, planned revaluation, not a surprise one. In the end, if the Iraqi dinar did suddenly revalue overnight, it would be a monumental economic event. While it's exciting to imagine, a more realistic path is a gradual, well-managed increase as part of a long-term economic strategy. Have you ever wondered what would happen if the Iraqi dinar suddenly revalued overnight? It's a scenario that gets a lot of buzz online, with investors dreaming of waking up to a massive surge in its value. While it's exciting to think about, let's explore what would actually happen if this dramatic event took place. How would Iraq handle it? What would the global impact be? And what would it mean for you if you hold dinar? First, let's understand what an overnight revaluation is. It's when a government suddenly and officially raises the value of its currency against others, like the US dollar, without any gradual changes or prior warning. If this happened with the Iraqi dinar, it would be one of the most shocking financial events of our time. So, picture this. It happens. The first thing you'd see is an urgent announcement from the Central Bank of Iraq. They declare the new official exchange rate and try to explain why the change was necessary. This news would instantly flash across every major media outlet worldwide. Inside Iraq, the banking system would go into overdrive. To prevent chaos, many banks would likely shut their doors temporarily. ATMs would be paused to allow for system updates and to standardize new procedures. For everyday Iraqi citizens, it would be a mix of excitement and confusion. People would rush to banks and news sites for information. Businesses would have to recalculate all their prices overnight, leading to a lot of uncertainty. While a stronger currency sounds great, some would worry about its impact on their savings or the risk of sudden inflation. The shockwaves wouldn't stop there. They'd hit the global financial system hard. Foreign exchange markets would probably freeze trading on the dinar to stop speculative chaos. Big-time traders and institutions would hit pause, waiting for the new rate to stabilize. And what about oil markets? Iraq is a huge player in OPEC. A stronger dinar would force a recalculation of oil contracts and could even influence long-term international supply agreements. Neighboring countries like Turkey, Jordan, and Kuwait, which have close trade ties with Iraq, would also feel the immediate effects. Now for the part everyone holding dinar is most curious about. If you are holding physical IQD, a sudden massive revaluation could mean incredible gains literally overnight. But cashing in wouldn't be simple. Currency dealers and banks would be overwhelmed. They would likely impose temporary limits on how much dinar you could exchange per day and might even require appointments. And don't forget the paperwork. If you suddenly have a large profit, you'll need to provide proof of where you bought the currency and comply with tax and anti-money laundering laws. This could be a huge headache for unprepared investors. Back in Iraq, the economy would be on a roller coaster. On one hand, a stronger dinar means stronger purchasing power. The country could import goods more cheaply, which is great for businesses and citizens. It could also help stabilize the economy and attract foreign investment. On the other hand, a sudden jump could lead to massive confusion, price miscalculations, and market disruptions. A successful revaluation needs a ton of preparation. So, how realistic is this overnight scenario? While it's technically possible, most economists agree it's extremely unlikely. Governments almost always introduce major currency changes gradually to avoid shocking the system. For Iraq to pull off a surprise revaluation, it would need a fully modernized banking system, stable oil revenue, and clear coordination with global markets. Without these pieces in place, a sudden move could do more harm than good. In summary, an overnight dinar revaluation would be a global financial earthquake. While the idea is thrilling, real-world currency changes are usually slow and steady. Have you ever imagined waking up one morning, checking the news, and seeing that the Iraqi dinar has skyrocketed in value overnight? It's a fantasy for many investors, a story of instant wealth. But what would actually happen if the IQD revalued without any warning? How would Iraq's economy and the rest of the world truly react? Let's break down the chain reaction of a sudden unexpected dinar revaluation. First, what even is an overnight revaluation? It's when a government instantly raises the official value of its currency. No slow adjustments, no advance warnings to the market, just a sudden dramatic shift. If Iraq did this, it would be one of the biggest financial bombshells in modern history. The first moves would happen inside Iraq. The central bank would issue an emergency nationwide announcement, broadcasting the new exchange rate and explaining why the change was made. This news would spread like wildfire through TV, government channels, and international media. Almost immediately, most banks in Iraq would hit the pause button. They likely freeze ATM withdrawals, halt in-person transactions, and work furiously to update their internal systems. This isn't to cause panic, but to prevent it, giving them a moment to adjust to the new financial reality. For ordinary Iraqis, it would be a whirlwind of emotions: excitement, confusion, maybe even fear. People would rush to banks, shop owners would scramble to reprice their goods, and everyone would be looking for official guidance on salaries, loans, and their savings. The first 24 hours would be incredibly intense. Meanwhile, the shockwaves would hit international markets instantly. Global Forex platforms would most likely freeze all trading of the Iraqi dinar. This is a standard safety measure when a currency becomes too volatile. Traders and global banks would stand by, waiting to see where the new rate stabilizes. And what about oil? Iraq is a huge oil exporter. A stronger dinar would instantly change everything. Oil contracts, payment agreements, and future pricing would all need to be recalculated on the spot. Energy companies and governments that depend on Iraqi oil would have to reassess their financial commitments immediately. The ripple effects would also spread across the Middle East. Iraq's neighbors like Turkey, Jordan, and Kuwait would feel the pressure. Their central banks might need to make their own exchange rate adjustments, or call emergency meetings to prevent economic instability. Now, for the part that investors dream about. If you were holding physical dinar, you'd suddenly be looking at massive potential profits. But cashing in wouldn't be as simple as walking into your local bank. Initially, banks outside Iraq would likely restrict exchanges. They might limit how much you can exchange per day, require appointments, or even delay large transactions. Why? Because they need time to get enough liquidity to handle a massive influx of dinar. Plus, governments will be watching. You need to provide proof of where you got the currency and be prepared for major tax implications. Sudden wealth comes with serious legal responsibilities. For Iraq itself, the economic impact would be a double-edged sword. On the one hand, a stronger currency means greater buying power. Imported goods would become cheaper, and the cost of foreign services would drop. This could significantly improve the quality of life for Iraqi citizens over time and help control inflation. A stable, strong dinar could also attract foreign investors eager to participate in Iraq's rebuilding. However, a sudden jump also carries huge risks. Businesses could miscalculate prices, existing contracts would need to be renegotiated, and widespread confusion could disrupt the economy. Even a strong currency needs time to settle after such a dramatic change. So, is an overnight revaluation like this actually possible? Most economists agree it's extremely unlikely. Sudden revaluations cause massive instability, disrupt banking, and can lead to public panic. Instead, governments almost always prefer slow, controlled, and predictable adjustments. For Iraq to undertake a large revaluation, even a gradual one, several things need to happen first. The country needs to modernize its banking system, succeed in its anti-corruption efforts, and build up its foreign reserves. A stronger dinar is more likely to be the result of long-term reforms, not a sudden financial shock. While the idea of an overnight revaluation captures the imagination, the real path to a stronger Iraqi economy is paved with careful planning and steady progress. What if you woke up tomorrow and the Iraqi dinar had suddenly skyrocketed in value? No warnings, no gradual changes, just a massive overnight revaluation. It's a thrilling idea for investors, but the reality would be a complex global event. Let's break down exactly what would happen in the first few hours and days. First, inside Iraq, the central bank would issue a crisis-level announcement. This wouldn't be a quiet press release. It would be an immediate declaration of the new exchange rate, the reasons for the sudden move, and strict instructions for banks and citizens. The news would spread like wildfire across Iraq and hit global media outlets almost instantly. To prevent absolute chaos, Iraqi banks would immediately shift into emergency mode. They would likely restrict large withdrawals, disable ATMs for a few hours, and suspend all currency exchange services. Their main goal would be to update their systems, recalculate every single account's value, and prevent a nationwide panic. For the average Iraqi citizen, it will be a whirlwind of emotion. Imagine feeling joy, shock, and confusion all at once. Some would rush to deposit their cash, while others would worry about how this affects their salaries and the prices of everyday goods. Shops would probably pause sales, waiting for clarity on new pricing. The first 24 hours would be incredibly intense. Now, what about the rest of the world? Global markets wouldn't just sit and watch. Forex trading platforms would immediately freeze all trading of the Iraqi dinar. With such extreme volatility, no broker would risk the potential for massive losses. The international oil markets would also feel the jolt. As a major oil producer, a stronger dinar would force oil companies to recalculate contracts and reprice future deals, causing short-term turbulence in energy prices worldwide. And what about the countries bordering Iraq? Nations like Jordan, Kuwait, and Turkey, which have close economic ties, would feel the shockwaves instantly. Their central banks would likely call emergency meetings to discuss interest rates and how to stabilize their own currencies. It would be like an economic earthquake hitting the entire region. Of course, the most exciting part for many is what happens to global dinar holders. An overnight revaluation could mean instant, massive profits. Anyone holding physical dinar would see their investment's value multiply. Currency exchanges would be flooded with demand. But here's the catch. Don't expect an easy payday. Financial institutions outside Iraq would likely delay large exchanges, set daily payout limits, or even require appointments. They need time to stabilize before handling such huge volumes of cash, and don't forget about taxes. A huge financial gain means a huge tax bill. You'd need all your paperwork, like receipts proving when you bought the dinar, to comply with financial regulations. Many people might be unprepared for that side of things. Back in Iraq, the economic transformation would be immediate. With a stronger currency, the country's purchasing power would soar. Importing goods would become cheaper, which could improve living standards and help control inflation. However, the short-term disruption would be significant. Businesses would struggle to reprice everything, and existing contracts would need to be renegotiated. This initial chaos is exactly why most countries avoid sudden reevaluations. So, could this truly happen overnight? While it's a captivating thought, most economists agree it's highly unlikely. Sudden changes create too much instability. A gradual, controlled revaluation is a much more realistic path. For an overnight move to even be considered, Iraq would need its banking system fully modernized, corruption under control, and strong support from global partners. In the end, if the dinar did revalue overnight, it would be a historic financial moment. While the idea of instant wealth is exciting, a strong and stable Iraqi economy is more likely to be built through steady long-term reforms, not a sudden shock to the system. Thanks for watching. And don't forget to like and subscribe for more deep dives into the world of finance.